What an amazing day to be in Bitcoin. What an amazing day to be in crypto as Bitcoin smashes through its all-time high. And this thing looks like it's unstoppable. In fact, today we're going to be taking a look at why Bitcoin, Ethereum, and DOT are probably unstoppable. And then in the saga of XRP versus the SEC, Brad Garlinghouse publishes a series of tweets. I'm going to tell you why I'm still not convinced. And then we banter. We banter with the best. We banter with Coach K, with Crypto Burb, and with Big Cheds. So it's Friday afternoon. Bitcoin's at an all-time high. Crypto's at an all-time high. Your weekend's about to get a whole lot better. So give me some love. Hit the like button, hit the subscribe button, and let's get straight into the content.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, that's CryptoBanter.com, and this is the place where you talk crypto, where I talk crypto, and where we all talk crypto. This is your station. We know the traders need live, real-time information, and that is what Crypto Banter is about. It's about bringing you that live, real-time information that you can make trading decisions from. So let's get straight into the content. Well, if you were watching the markets, we had a little bit of a red candle, a bit of a shock, and then Bitcoin smashed through its all-time highs. Today, we're going to look at why Bitcoin, Ethereum, and DOT are probably unstoppable. And if you watched our show yesterday, you'll remember that Ethereum is now in the top 10 assets in the world. And this makes it, well, quite difficult to ignore. And if Ethereum is quite difficult to ignore, we've got to understand what made it so difficult to ignore. So let's look at Bitcoin's journey. When Bitcoin started, there was very little interest. But as people started adopting it as a store of value, as people started to adopt it as a store of value, so the interest grew. And as the interest grew, so did the price grow. And the same thing is happening with Ethereum. In fact, it's almost uncanny. The Ethereum charts are growing exactly the same as the Bitcoin charts, both in terms of adoption and in terms of price. There's a renowned investor, Raoul Paul, and he retired at the age of 35. He's a great investor. And he is self-admittedly was a Bitcoin maximalist. And he's now completely changed his view. In fact, in a series of tweets, he finally realized that Ethereum is following exactly the same trajectory in terms of adoption as Bitcoin is. And if it's following the same trajectory as Bitcoin was, then obviously the price must be the same. And if you look at the price correlation is even more freaky because it's following the price correlation and the adoption correlation 1-to-1. So the question is this a coincidence, or is there some scientific formula or more fundamental formula that we can use to price these crypto assets or these network assets? And that's what we're going to do today. Today, we're going to look at a more fundamental, more scientific approach to valuing crypto and Bitcoin, blockchain and crypto assets. So what I want you to do today is I want you to take all the noise out of your minds. Let's break away from the weekly noise, the monthly noise, the daily charts, the candles, and even the news. And let's get right into the fundamentals. Let's understand whether there's a fundamental or scientific way to price and value these blockchain assets. If you are watching us on YouTube, hit that like button, hit the subscribe button, because that's what gets our distribution out there. That's what brings more content to more crypto people. And that is what we need to grow this industry and to make everything work. Alrighty, let's get into it. So I said to you at the beginning of the show that there are three assets that in my mind today are unstoppable. And that was Bitcoin, Ethereum, and I've recently added Polkadot. And now I'm going to detail for you why I think that those three assets are completely unstoppable. So let's get straight into it. If you want to understand the valuation methodology, what you're going to do is you're going to look at the biggest companies in the world, or the companies in the world that command the highest valuations. And if you look at the list that I've made here, it's companies like Facebook, Tesla, WhatsApp, Instagram, Amazon, Google. The question is, what do all these companies have in common? Why is it that investors are willing to pay so much of a premium for these companies, much higher than for other companies? And the only way to do that is to see if there's a common denominator amongst all these companies. And a little bit of research will show you that there is. And that common denominator is what's known as the network effect. You may have heard this term in social networks, but today we're actually going to break down what the network effect is. So let's look at a definition of what the network effect actually is. The network effect is defined as a phenomenon where an increase in the number of users on a network improve the value of the good or service. So let's take the internet as an example. The more people that use the internet, the more content, the more fun the internet is, and therefore the more people use the internet. And that is what you call the network effect. When more people using a service add to the value of the service or protocol, then that's what you call the network effect. Now let's go back to some very popular network effects, some which you may not even know. One, of course, is the internet. The internet has a network effect because the more people that use the internet, the more content there is. The more content there is, the more rich the internet is, and the nicer it is to use. Let's look at Instagram. You could probably launch a much better version of Instagram. But the problem is that because so many people are already on Instagram, the only way for you to get your content out there is to post on Instagram. And the more you post on Instagram, the more people will use Instagram. And so it increases the value of Instagram. And that's true for all of these big companies that require these high valuations. But is this network effect coincidental, or can we actually narrow it down to some kind of scientific formula? Well, we've worked out that you can narrow it down to a scientific formula. In fact, there are two scientific principles or economic principles that create the network effect, or that define network effect. And I think as blockchain investors, we have to start looking at what these actually are. And the first one is what we call Metcalfe's law. Metcalfe defines a law that says that the effect of a telecommunications network, or the value of a telecommunications network, is proportional to the square of the connected users in the network. So in other words, what he's saying is, it's not, the value of a network is not the number of users 1 + 1 + 1, but actually the square. Let's take a look at a telecommunications network. Say that on a telecommunications network, it's me and you. The total number of calls that can be made on the network is I can call you and you can call me. And that's the value of the network. But if we add a third person to the network, now you can make 9 calls. I can call you and I can call the third user. You can call me or you can call the third user. And the third user can call the both of us. And that effectively is what Metcalfe's law says. Metcalfe's law says that the value of a network increases exponentially to the sum squared. And that's the first law which defines the network effect. The second law which defines the network effect is a law called Barbassi's law, or Barbassi law. And what he says is that when you have an open network, the more connected a node is, the more likely it is to receive new connections. In other words, what he's saying is, the more used a certain platform is, the more likely it is to increase in value. And so if you take that and combine it with Metcalfe's law, if you say the more users a network has, the more users are likely to join it, and then you say with every user that joins it, the network increases exponentially, you combine Metcalfe's law and Barbassi's law to get the true value of the network. And that is why investors are willing to pay such a premium. Now, let's look at how this applies to blockchain and why it's so important in blockchain. Well, we know that blockchains are closed ecosystems. You can't move applications and tokens between one blockchain and another blockchain. That's impossible. So with that said, the networks are closed. And that means that as one node gains users, let's say Ethereum, the more users they get, the more the value grows exponentially. And Barbassi's law says that as users come to Ethereum, more users will come to Ethereum. Metcalfe's law says the more users that come, the more the value increases exponentially. Now, let's look at this in a real life example. Say that you were building a money transfer app, and you had the choice to build the money transfer app on Bitcoin or on a completely new network with much lower fees. Let's assume that the network with the much lower fees was even faster. Where would you build your money transfer application? Chances are you'd probably gravitate towards building it on Bitcoin. And that's because Bitcoin has exchange links, it has developers, it has custodians, it has merchants, and it has wallets. So why would you go and start on a smaller chain? Rather build it here. And as you launch your money application, your money transfer application, more users join the Bitcoin network, and it makes the Bitcoin network more valuable and more attractive for other builders to do it. And that is why the blockchain can be, or why the network effects are so powerful when it comes to blockchain. But the most important part of this is, or for me, the most important part of this analysis is that once a network has the network effect, like Bitcoin, like ETH, like Polkadot, there is no way to stop it. There is no way to stop the snowball from growing. The only way to stop the snowball from growing, or there's three ways that you can stop the snowball from growing. One is government intervention. And we already see that in the US, they're talking about breaking up the big conglomerates. Google is threatened to be broken up, Amazon, et cetera, et cetera. The next one is if the technology breaks, and the technology breaks beyond repair. And believe me, I don't think that Ethereum, Bitcoin, or Polkadot are breaking beyond economical repair. And the last one is if you can launch a competing protocol that has 10x the functionality, or that is 10x better than any one of those three networks. And let me tell you, I know Bitcoin, I know Ethereum, and I know Polkadot, and you ain't building anything that's 10x better than them. So for me, that's why Bitcoin, Ethereum, and Polkadot now have the network effect and are completely unstoppable. If you've liked that, hit the like button, hit the subscribe button, because we are going to move to the next part of the show. And the next part of the show is I'm going to look at a series of tweets that Brad Garlinghouse posted to defend XRP. And let me tell you, even after the series of tweets, I am not convinced. I'm not convinced that he's addressing it. In fact, I think that he's still trying to take control of the narrative. And I don't believe that his tweet storm did any help to help it. So let's get straight into it. Let's actually look at the tweet storm. He says in the tweet storm, he says, I'm not going to litigate the SEC's unproven allegations on Twitter. As you can imagine, there are new considerations as to what can and should be said after the litigation process starts. However, I would like to address 5 quick questions. And the first question is, why didn't Ripple settle with the SEC? He says, can't get into specifics, but know that we tried. In other words, what he's saying is we tried and they didn't manage to achieve a settlement with the SEC. And I imagine that XRP and Ripple have a lot to lose in this litigation. And I would imagine that the not being able to settle means that the SEC did not want to settle, because I would have imagined that Brad Garlinghouse and Ripple would have thrown a lot of money at the problem to make this thing go away. The next question he addresses is, did you pay exchanges to list the XRP token? Did you pay exchanges to list the XRP token? And he responds and he says, XRP is one of the most liquid digital assets, and 95% of it is traded outside the US. Ripple has no control of where these assets are listed. And he says that a lot of these exchanges have just suspended trading of XRP and Ripple and not actually delisted it. Again, I don't think he answers the question. And to me, I think he did pay the exchanges, and he did that by giving them a whole lot of XRP tokens. We're going to take a deeper look at that. The next thing that he addresses in his tweet storm, he says, when are you responding to the SEC and why are you going silent? And we are, of course, waiting for a response from them. He says in the next couple of weeks, we should have a response. He also says, do your investors, he was also asked, do your investors still have faith in Ripple? And he says that, yes, investors do, but let's not forget that one of his main investors actually pulled out after all of this has happened and said that they're not supporting them. The next thing that he says, and this is the biggest problem for me, he says, did you pay customers to use XRP? He says, yep, we provided some customers, especially first movers, with incentives to use the ODL. This is building a payments network 101. Every payment network must incentivize people to build on it. And to me, what he's basically saying is, and this is the part that irks me the most, because they are a centralized company. The centralized company has shareholders. This same centralized company has tokens. And they were selling those tokens to you, and you were buying them, and they were taking that money and they were using it to fund the growth of the network and the growth of their business. And the growth of their business was only going to pay dividends to their shareholders and not to the token holders. And I picked up this article by The Block, which I'm sure you guys read, but it says, Ripple paid remittances from MoneyGram $9.3 million in XRP in Q3. And that's not the most shocking part, because what it says later on in the article is it says that actually grew by 5.8 million in Q3. In other words, it keeps growing and growing. And the worst part for me is that Ripple and MoneyGram partnered up in the 3rd of June, and a MoneyGram spokesman admits that as soon as they got their XRP tokens, they sold them into the market and they didn't use XRP at all. So you make your own call. For me, I don't believe that Brad Garlinghouse answered any of the questions. I think that he's trying to take control of the narrative. I don't think he's doing a very good job. And again, for me, XRP is something to avoid. But I mean, who am I? Let's rather ask the big cats. Let's ask Coach K and let's ask Big Cheds. Would you guys be buying XRP?
You, Coach.
All right. I would say no. I don't really like XRP. I mean, there's 5,000 other assets you can trade, and with all the drama and stuff, it may pump just for the fact of the matter of that it's dumped so hard. So you might get a bounce. So, that's a great trade, get little scalps, but I would not be going like, all right, I'm going to ape in and be XRP right here. So that would be my opinion on it.
I think,
Jay, what are you thinking?
Yeah, and great. Thanks for having me, Rand. I love your work. I think you want to be looking for assets that are going up. You want to be looking for bullish momentum. One of the biggest mistakes traders make is trading against the trend. With XRP, we have a downtrend. We have a kind of an accelerating downtrend. Sure, there's a user base that will never go away, but we have headline risk. We have the potential for more delistings, more suspended trading. So what you should be looking to do in a downtrend is selling the rips. When XRP bounces, you should be looking to initiate new selling positions. I did a little bit of that last night around 35, 36 cents. That may get stopped out. That's okay. But I would not be looking to buy XRP here. No.
I mean, you guys are looking at the trends. I'm looking at it from a much more fundamental point of view. And, we spoke about the network effect earlier on the show. XRP doesn't have a big, thriving builder community. It seems to be one company and a little bit more, one company and change actually building on this protocol. And, their own clients admit that they're not actually using the XRP. They're not actually using the protocols that use XRP. So I'm looking at this. I'm going, hold on a second. We're going into a rampant bull market, an altcoin market, not only a Bitcoin and Ethereum market. Why the hell would I keep buying XRP?
Can I just real quickly, there's a psychology where people like to be contrarian traders. They think, if everyone's wrong and I'm right, I can retire off of this. I think I've been there myself. I've tried to say the market's wrong. And, at the end of the day, my wife's pissed at me. She's like, where's that $5,000 we had yesterday? So
well, I said the market's wrong. Guys, I'd love for you to tell us in the chat whether you think that you would still be buying XRP or whether there's any reason to be buying XRP. Hit that chat, hit the like button, hit the subscribe button. Let us know what else you're buying. And speaking of what else you're buying, Coach, I'm looking at you because it's getting very scary for me out there. Yesterday, we had a red candle, which was a $4,000 candle or $5,000, one red candle.
Mm-hmm. Yeah.
The higher we go up, the bigger the candles, right?
Yeah.
Okay, so what are you saying now when Bitcoin's at an all-time high? Is this the time to take profits? Because what worried me
is take profit. It's always time to take profit. I mean, it depends on what type of trader you are. If you're trading on futures, of course, always take profit. I mean, you're just trying to get more US dollars most of the time. If you're a holder of Bitcoin, I mean, selling a little bit also isn't the wrong choice either. But when we're looking at things like the weekly RSI and it's at 96, it's pretty high. It's pretty extended. We're probably going to go to like 42, 44,000. And that's probably going to be the top. I'm going to call the top around that 44, 45,000.
You're calling
not the top of the whole trend, but the local top. It'll come back down. We'll have a little bit of a cool off break. The RSI, and you know what? The thing is, things like RSI don't really matter, to be completely honest. But we're gonna need a cool off period so people can garner more funds. People can sell off a little bit. Some people will freak out and sell, and then there'll be a little bit of a spring action happen, and then it will go higher. So we need to have that. It's important.
Did you watch the alts yesterday? Did you watch what happened to the alts when Bitcoin took that $4,000 correction, which for Bitcoin was only like a 10 to 15% correction, depending where the starting point is. But some of the alts, Stellar Lumens went down 30%. Cardano went down 20+%. And those are the major alts. That could be a sign of things to come. That's maybe a warning sign to these guys that are buying high leveraged altcoins to say, guys, watch out. Cheds, what do you think?
I have a lot to say, and Coach, I like your work. So first of all, weekly RSI 95. How do you get there? You get there by being insanely bullish. So it's
Show me
actually
the charts.
okay.
Coach, show us the charts. Let's look at the charts.
Who,
You
me?
want to look at it weekly? Yeah, let's do this. Hold on
Well,
a
who
second.
wants to share their screen? Guys, while they are sharing the screen, as I ask you to do all the time, hit the like button, hit the subscribe button. Our channel, like all the YouTube channels, is growing a hell of a lot. We're getting more likes, more subscribers. We're well over 50,000 subscribers, and that's only because of the love that you give us. And every single day you're growing. So, Coach, you got your chart up first. Let's look at the chart. Whoa. Okay,
Yeah.
what do we
Yeah, so what we're just looking at, I'm just going to throw up the weekly. So this doesn't mean that we're going to come down like significantly. RSI can be very misleading. A lot of traders that don't really understand what it means. And I think what Ched's going to go off and say is, RSI doesn't guarantee that it's going to go and cause a correction in the market, which is, he's right. We've been in this territory before. But if we go back to the last bull market at the top, we're actually way higher than we were then, which is also a good thing. But usually what happens, RSI will come back down and we'll stay high. It would just it's at 90, almost 98 right now,
Coach,
which is like,
Coach, take us back one step. What does RSI mean? What is the relevance of it? There's a lot of chat here in the chat that, the guys are saying RSI, what's RSI? Some
it's a
people think
relative strength index. It's basically a momentum indicator. So it shows you like the momentum in the market. So what Ched's going to say, and he's probably going to add to this, is when there's a lot of momentum in the market, when everyone's really bullish, that will continue going up, right? But at some point, the market will get exhausted and people will take a break, or a fund will go, wow, I am so much in profit. I mean, like, look at this. We're looking at the weekly candles here, and we just have gone from, 5 weeks ago, we were at $19,000, and now we're at we're at $41,000. So it's pretty incredible. You know what I mean? And that's where I'm looking at. I'm going, okay, at some point this will correct down, and it needs to. It has to. I have my zones on my charts that it will correct to, and okay. I think that it's important that we do that, because we can't just keep doing these huge candles.
When it corrects, I mean, do you expect a much bigger correction now? I mean, you were calling like a 2, 3, 4. You were talking about a 20% correction. Now you're still calling a 20% correction, or are you saying that you could probably look at a 30 or 40% correction?
I think we could see a $10,000 candle on a daily. Go, like, seriously. I think we could see a 10,000, because how extended we are. We could see for the very first time, and guys, hold whatever you need to hold on to, because you're going to potentially see a candle that goes $10,000 down in one day, and it's going to literally freak the shit out of you. Sorry for my French.
What are you saying about that?
I'd love to talk about that. So I actually would love a $10,000 candle. I think you are, when you're in a strong uptrend, every dip is a blessing. Yes. I actually don't think we really need a correction, because what we have is a massive supply-demand imbalance. You have unprecedented amount of institutional accumulation. There's just not enough Bitcoin. It's not like 20K where we had the RSI and then, boom, futures, and then the thing dropped. All dips are being bought. And the point I made on Twitter shortly before coming on is what we're seeing with these $3,000, $4,000 intraday candles. That's resetting the price action. That's allowing a price churn in the middle of the channel. That's a mid-channel consolidation. So you can actually continue at this steady pace to whatever number you want to imagine. It's a supply-demand imbalance. I'm not an FA guy. I'm a chart nerd. But when there's not enough supply, it's just going to keep going up. Number one.
I want to show you something here. If you looked at the candle yesterday was quite brutal. It was brutal. It was 10% or 15%, and it happened literally in 15 minutes.
Let me go, Rand. Let me go here. All right.
Let's share your screen.
Let's go this one. We'll go there. We'll move this over here, and tell me when you can see my screen. All right.
Okay, we can see your screen. I'm adding your screen. Let's go, Chet.
So look, was that candle brutal? It wasn't even brutal. Rand, we didn't even test the EMA 8. We didn't even test the primary uptrend support, which has served as really the buy the dip spot ever since we accelerated past 18, 19, 20K. It didn't even touch the EMA 8. We're riding the upper Bollinger Band. It's a mid-channel correction, and you can just chill with the RSI in this power zone daily, weekly, as long as you want. RSI is a bounded oscillator. Okay, that means there's an absolute limit for how high or high low it can go. That's why you get all sorts of people making bearish divergence calls, regular divergence calls on the RSI, which is a mistake. It's a bounded oscillator. It has an absolute limit, not like an index, like an on-balance volume, tallying the red and the green volume. We have a very strong acceleration. We're in blue sky territory. You just want to buy any dip. Will we get 20K again? I don't think so, but mortgage your house. Are we going to get 30K again? Maybe, but we have a supply-demand imbalance. Yesterday's dip was a joke, okay? It didn't even touch the EMA 8, 33, 34K. There's just not enough Bitcoin. We have Dems in charge. You're going to have 2K checks going out. You've got money printing off the wazoo. I don't know what you're doing if you're not buying dips in Bitcoin. Go buy Ripple and maybe think Brad is Elon Musk. Maybe I'm wrong. just buy Bitcoin. This isn't complicated. Buy the dips. And what you want to do is all you need to do is establish key horizontal levels. The classical chart, and you come to learn that horizontal price levels are a lot easier to play than these diagonals. You can draw them at any angle you want. Identify key horizontal levels that you're line in the sand. Enter a trade there. Put your stop loss there. Have a trade thesis. Follow it. But when you're in an uptrend, buy the dips, man. Buy a beach house. What are we talking about here?
Absolutely. I love it.
Cheds, I love your analysis. I mean, it was straight to the point, and you're making me feel a lot more comfortable. Let's talk about alts. I mean, Cheds, are you an alt guy? Are you a guy that apes into alts?
No, I don't ape. But what I do is I look for. Okay, here's what I am. I'm a Bitcoin maximalist. You want to know why? Because it's the uptrend. It's the winner. Alts are fun. I don't think we're gonna have alt season where everything runs. I think we'll see a flight to quality. We'll see DOT run in Uni, YFI. We're seeing these other projects, Link, ADA. Okay, but what I like to do, if I've missed something, I go to a lower time frame. Like DOT was running. Oh, I missed the run. You buy the consolidation. You buy the rides and support in consolidation. So what you can do during quote-unquote alt season, during quote-unquote whatever, buy the dips in these uptrends, these accelerating altcoins. Bank the profit, go back to Tether, go back to Bitcoin, and then buy the Bitcoin dip. Use Bitcoin, use alts to get more Bitcoin, and then just sit back and have a margarita. What are we talking about?
Okay, and what else are you looking at? Because I need a margarita. So what else? So you mentioned Cardano. Is that something that you're looking at?
Look, what I like to do, generally speaking, I try not to watch too many projects at once. I found personal experience, 10, 15 projects, you get a good feel for the chart. So what I do is when I see those projects that have had relative strength in the past, I maybe look to that. When I see alts moving, let me try to play ADA. Let me try to play DOT. Let me try to play Blink if it has the Momo. I'm not going to push it. You look for momentum. You follow that short-term momentum. You kind of go from there. Look on Twitter. See who the good traders, what they're trading. There's quality people. They have a history. You can look at what they said now versus a year ago. Find those sources. Take advantage of them, and play the uptrend. Buy the dip in an uptrend. Don't go against.
Who are these good traders? Give us the names. I mean, give our community.
Crypto Burb. Crypto Burb.
Burb will be joining us in a few minutes. I think he's actually here in the chat. Is he on the chat? He should be joining us in a minute or two.
I'll give you like 6 names. Look who I follow. Altcoin Psycho, Trader Main, Dawn Alt. My mind's blanking, but look who I follow in crypto. There's a great group of people who are technical analysts. They're not trying to like scam you or mess with you. Hit me up on Twitter. I'll give you some recommendations. But we have a really nice community. Our community has evolved a lot from a couple of years ago when you had a lot of people taking advantage of the new money. I think the people who survived are looking to improve the community and keep it going.
Yeah. Okay, and these good traders, what are they called? Cheds, I'm trying to get into your head to see, or trying to get into your screen to understand what it is that you're actually trading. What are the entry points and what are the exit points?
All right, I'm going to give you an idea. Let's just give you a little bit of, I'll just give you like a minute here. Let's just pick an alt. Let's just pick that one. We'll go like there. We'll hit that. Okay, let's take DOT. All right, we'll just do a little walkthrough through DOT. So what are we doing in DOT? It looks like it's pulling back a little bit on the daily chart, but let's imagine we haven't started to correct it all yet. And what we're doing is we're just accelerating in a 1 hour chart, maybe a nice little lower time frame chart. What I'm looking to do is I'm looking to establish price levels at which I can initiate a trade thesis. I've identified a prior resistance. On that resistance break, I have what's called a throwback, which is a bullish retest of resistance. This provided you an excellent entry. You can do it again. You slide up these horizontal levels, these key levels. You start to scale in. So what you want to be doing is buying dips in an uptrend. You want to be identifying levels on the chart with which you think there's a decent risk return and with which you can initiate a stop loss that will allow you to define your risk, right? You have to be methodical about this. If it's a downtrend, look for those bounces. You can take any number of alts. I could quickly scan through and take like EOS BTC, and you take EOS BTC. Let's go to like a daily chart. And if you look at EOS, for example, you've had these bounces, and right there, boom, right there, boom. You have these overextensions, these price movements above the upper Bollinger Band, these upper shadows. As a trader, you're looking for these opportunities. You're looking to rejoin the trend at a move that is outside the trend, right? That's just the ABCs of it, right? That's just how I do it.
Okay, Coach, any coins that you're watching? Chaz, I love that analysis. I think our viewers are loving it. They're going crazy in the chat. And I'm going to give them a chance to actually ask us questions. If you guys do have questions, start hitting now on the chat. And I'm going to get Coach K and Chet to ask us. And we are waiting for Crypto Burb to join us. He was supposed to be on, but let's have a look. Coach, what else are you watching? I know that you're the call man. You made some amazing calls. Some of them have done over 100% in the last week, actually.
Yeah, I mean, we happens, especially in a bull market. But I'm looking at actually Band right now, and I'm actually waiting for it to go a little bit higher. I'm a little bit different, when it comes to trading, because I'm more of a high time frame trader, and I look really for daily price action movements. And I'm an Ichimoku trader, so pretty much anything under 4 hours is not really my thing. So I'm really looking right now to see this TK cross happen, us to get above this cloud, because we have a really nice bullish Chiku span and we have a bullish Kumo twist. So if we get above this cloud and we break out, we'll look for that retest. So basically what I'm looking for on this one is breakout, retest the top of the cloud, and then that would probably be tomorrow. And then we would come up to around $15 again. And my stop loss would be, down below this low right down here, right around here. So around the Kijin.
So you're looking at Band, and again, you're looking at it against Tether. We've got Crypto Burb with us. Burb, welcome back to Crypto Banter, man.
Hey, it's good to see you guys. How's it going?
So I think I've got the best panel. I think I've probably got the most prestigious trading panel in the world. Yeah, I've got Burb, I've got Chad, I've got Coach K. You guys are going to be teaching us a lot about what to do. Burb, what are you watching? We spoke about the Bitcoin chart. Chad's told us that you should just be accumulating those dips. And if ever we get another $4,000 dip like we did yesterday, just keep buying that dip. Are you of the same school of thought? Do you think there's going to be a much bigger correction?
Whoa. So first of all, hi to everybody. Hope you guys are doing okay. Good to see those good smiley faces in 2021. I hope this year is actually going to be fucking better, than 2020. But still, the only positive aspect was actually, what Bitcoin had us, with the accumulation, right? Because apparently all the, everything below 20,000 seems like so small, so tiny, right? So it's crazy. It's crazy. And answering your question more directly, Ren, the higher we go, the more cautious I should stay, because as I said, the time to accumulate was back in, a year ago when we were actually calling all this stuff. Chet's, I'm really good friends with Chet, so Chet will also confirm probably, from the TAE point of view, we're good lads. And but all the accumulation point was actually, below 10,000, the best part, because back in September.
But that's history. That's history, and there's not much we can do about the history. And a lot of our viewers are saying, look, we didn't accumulate in September. We're not as exposed as we want to be, and we want to know what we should do right now. Every time we say that we want to invest, we want to wait for a pullback, it just goes higher and higher and higher. In fact, I had someone call me today and said, I called you 2 weeks ago and you told me not to invest all my money. I would have doubled my money if I would have just put in Bitcoin.
And it's your fault, right? And it's your fault.
Yeah, it's my fault. But I did tell him that. So the question is, what do you recommend to people who are watching this and are saying, look, we don't have enough exposure to Bitcoin. We don't have enough exposure to crypto. If you were coming in now and you said, I need more exposure, what do you guys do? Cheds, I'm going to look at you first. What would you tell somebody who's just coming in or someone who doesn't have enough exposure? What do you tell them?
It's simple. What you want to do is identify levels on the chart where you feel comfortable buying. That would be the EMA 8. That would be key horizontal prior resistance 38, 39. Identify it and then think about your risk threshold. If you're going to enter at 38, what's your stop loss? Doesn't matter what you're going to do. So have an approach where you're identifying a level and you have an idea behind that level. No trade should just be, I'm going to buy, see what happens, go to the bathroom, come back, hopefully not stopped out. pick a level, respect it, and go from there. And the benefit of a Bitcoin uptrend is pretty much any idiot can buy and look good in like a week. And I'm an idiot and I look good. So all you do is identify the EMA 8. It's a great level. Buy the support in the uptrend. Go get a girlfriend. You're all set.
Okay, Burb, I want to ask you this question. If I buy and the price starts to go up, do I buy more? Is that confirmation?
It's actually like, this is called compounding, but the safest way is actually just of course to actually go DCA rather than well, it's about actually depending on the trading strategy, not even trading strategy, but trading system. There are a couple of trading systems. There's a thing that is called trend following system, which uses DMAs that simply just follows the trend direction. And there, in the trend following systems, you actually buy high and sell higher, right? Something that is actually like a momentum gain, which is it's pretty much like called fading the trend, because you actually by DCAing, by doing DCA, you actually just go against the trend. But then you need to have quite a big certainty that actually there's been like just quite 80% decline or something, because if there's been 10% decline, and then 900% rally, then you're literally risking buying the top area, right? And I'm not saying we're actually just very far from top, in my opinion. I saw a beautiful chart by Peter Brandt, which I also respect a lot.
Can we share that chart? Have you got that chart? Has anyone got that chart? Let's share.
Yeah, let me just find it very quickly before I open the screen. Very quickly. I think this is a beautiful chart because it actually just adds quite some rationale to that. Quite some rationale to something that is completely no rational. So one second.
To the guys in the chat and the guys in the community, we've got 1,000 of you here. That's our biggest number yet. Guys, you are helping us grow our show. We're going to keep bringing you more content, but help us. Share this video. Hit the like, hit the subscribe, copy the link. Share it with your communities, because that's how we're going to grow, and that's how we're going to pump our bags and make this whole ecosystem grow. We're in it for the long term. We're here every single day bringing you stuff. I see you all in the chat. King's Taxi saying bye Cardano. Waisu. Ikanu, I see all of you in the chat. Thank you for the love, and I will bring your questions here just as soon as I'm first going to bring in Burb's chart. Burb, let's have a look at that.
Yeah, so this is this beautiful chart, that actually shows the history of Bitstamp since 2012, actually 11. After the first crash from 31 blacks to down 9 to 1.98, so which was the first bubble. We are actually experiencing right now the fourth bubble, the fourth bull market, and every single bull market has been a bubble, right? Which has the tendency to sort of like go exponential rather than in some horizontal, no, not even horizontal, but rising, ascending channel or whatever. So here, the buying is always very aggressive, which makes the chart pretty much like go vertical. And at the same time, the corrections tend to get more vertical, right? Because if there are funds on the market, and there are funds on the market, I think generally that this is not necessarily more like community-driven pump, the way it was, Discovery pump in 2017. Well, everybody, from the retail got pretty much like excited, and they just, kept FOMOing in. That's what pretty much like raised the prices. Here on the opposite sort of like end, we have the institutions. Back then, we didn't have enough infrastructure, in my opinion. Right now, the roles kind of like flipped, and surprisingly many, much of the fresh money came in March crash last year, which was pretty surprising, because that's usually when people panic sell rather than panic buy. And since then, the market structure, the market demography kind of like was extremely rich with the institutions, right? So this is pretty much like just driven, in my opinion, by institutions. And you keep hearing, the institutions are buying and so on and so forth. At the same time, the higher it goes, the more sort of like cautious I want to be, right? Because here, like yesterday, we are seeing like fucking $6,000 ranges a day, right? That's never happened like this any time before, even in 2017 top peak. So right now, this volatility. It means
$6,000 is just 15%, and we've had 15% days in 2017. We saw a lot of 15% days,
but not in 5 minutes.
It sounds higher because you're talking about 6,000, but our starting price is much higher. So for me, $6,000. Okay, well, 15%. I must be honest. By the time that I switched on my laptop to trade it, because I saw the alts going down and I saw Bitcoin going down, by the time I had my laptop open, it was too late. And the price was
Oh,
already
yeah. That's what I'm saying.
was retesting it again.
Yeah.
Guys, the chat's going crazy here. Cheds, I see you want to say something. Go for it.
Yeah, Ran, you should have an order in. You should have a low ball bid in that you don't think is going to fill, because if it fills, you're in a position of strength already. So why not throw in a bid at 33, 34, and then when you wake up, maybe you filled, and you can have confidence that you're in an uptrend. So even if you're down a little bit, you're going to get back there. So low ball bids are a good thing. That way, you get a little piece of it just in case.
Absolutely.
I'm always scared of leaving a bid because I never know what's going to happen, and I'm scared of the shock event. So even if I leave a bid at 35,000, and I'm always scared I'm going to be taken out on the way down to 30, though.
Who cares? Why does it matter? What do you care? Are you trying to? Do you need like a new shirt? You got to buy some money to like buy coffee or something? What are you doing?
I love your jacket though.
Hey, it's from my friend at Big Chonas on Twitter. Check him out. He hooked me up.
I love it. I love it.
Amazing guys. Now look, the community's going crazy, and I don't think they're going to leave you alone. They want calls, guys. They want calls. They're not leaving us alone. They're saying, great, you're telling us what happened in the past, but tell us what's going on in the future. Tell us what to buy. Tell us what to sell. Who wants to start? Coach, I see you nodding. You called banned. Anyone else that you want to call? Your last three calls, your last three calls have almost doubled.
Yeah, except for T-Fuel, because I did a BTC pairing, and that was a mistake. I think that's something to be said about that. Don't right now, and while Bitcoin is going, don't trade BTC pairs. I mean, use USDT or USDC or anything but BTC, because if Bitcoin's in a strength position, it is going to knock out your trades, even though T-Fuel by itself, without a Bitcoin trade, went up. So, I mean,
hold on a second. We got the chat going crazy. Let's follow the chat. Guys, buy or sell Coty?
Coty, I have to chart it.
Is that I've never heard of it.
You never heard of Coty? Okay, Coach, I know you watch Coty.
I do watch Coty a little bit. I actually sold mine before. Huge.
Buy or sell Link?
Buy or sell Link? Okay. I was a buyer of Link a couple days ago.
But I see you smiling. Tell me why you're smiling.
Yeah, I love those questions like buy or sell. You know, there needs to be a time frame for that, right? Because you can be bullish and bearish at the same time. You can be bullish long term and just bearish on a micro scale.
Can I talk? I think Link right now has a long-term uptrend, but it's correcting. I would not be a buyer of Link until it shows a little more strength and kind of reclaim some key levels. USDT, you want to get back above $16 on the BTC pair. We're in kind of a real big downtrend. We failed to hold the 50K Satoshi. Just kind of what Coach talked about with the BTC pairs. Don't trade them, but you still want to mark them. You want to continue to examine these charts. So if Bitcoin does correct, you can make some huge gains in these BTC pairs. So stay familiar with the charts, mark your key levels, be comfortable with them so you're ready if and when that opportunity comes. I would say ADA Cardano is an excellent buy on the weekly chart. I'm looking for a 38-cent price target for the rounded bottom on the weekly chart. I think that's a high probability we hit 38 cents from where we are now at 30 cents. ADA.
Yeah, I'm actually looking at the exact same level. It's funny. I just pulled up my chart and I have a 38.818.
Big minds just align well, right? But just also want to touch upon that. It's actually very simple because right now the king is Bitcoin. Bitcoin is a king because of the volatility. Volatility is what makes you money because you make money of the price difference, right? So it's draining the entire sort of like market attention of the traders to trade Bitcoin. So whoever is trading is sort of like altcoins against BTC, they are mainly in the minority. They're in the 30 or 33% of the total sort of like market cap representation. So being in the minority, you don't want to swim against the river stream, right? And here, the Bitcoin pairs that actually tried, Link myself to trade that yesterday. I believe I lost about 3, 4, or 5% on that one. Yeah, I was quite certain just about it being very strong. I'm not saying it's actually reverse to that. Yeah, exactly what you just said, right? Like this is extremely volatile. This big volatility on Bitcoin means big volatility and oscillations on Link. I do think there is a great chance. And I'm actually very quickly pull up the chart. I think there is a big chance it's actually just literally just stumping down the bottom. But at the same time, because of the volatility, it doesn't make it easier, if you know what I mean, right? And here's the USD pair. And naturally, USD pairs will be looking fine because Bitcoin is just pumping against USD. So whatever is priced in, against Bitcoin is also going to price increase in price in USD whenever Bitcoin pumps as well, right? Plus, this also has a lot to do with the dollar, which is getting, just its own oscillations, especially with the Trump right now going on, and this entire sort of like, I'm not a U.S. citizen, right? So I know only as much as the media tell, but this generally just brings a lot of uncertainty. And I personally, just believe, corresponding with Bitcoin, the higher it goes, the more cautious I want to stay, because these, like my portfolio yesterday swang probably by about 40,000-50,000 a day. And for me personally, this is quite a bit too much, because I actually struggle right now with just scaling up and leveling up from 6 figures to 7 figures. And it's actually the biggest pain in the ass, and everybody would confirm that, because you're not really there, with millions of dollars yet. And then you're just somewhere in between, and you're still looking back, but just struggle with looking ahead. And this this level of volatility pretty much. Yeah, was that?
Okay, let's finish and let's go to Cheds. I'm coming back to you because I want more calls from you.
I got one right now. If you go to, let me share screen. I have one that just broke out nicely. A nice one I've been watching, and I can give you an indication of how you want to be ready for these types of situations. If you go ahead and look at YFI USD, it's a very popular one. And if you look at this, it's had an excellent move here. But what you were able to do, you were able to identify a key level of resistance, which would be a potential a trend flip. So what you were able to do ahead of time, and this is what I talk about marking your charts, you were able to identify this level such that you knew if it broke, that'd be a buy signal, and then you can use that as your stop loss. So what we have now is a consolidating channel that had at one point identified a very clear level of price demand, or where people are willing to buy it. You have that nice re-entry, rejection, come back, another bite at the apple, bounce, a little boom, and then here's your early canary in the coal mine break of 29K, and then boom, buy signal initiated. That's your stop loss. It's real ABCs of any type of charting you want to call it classical, call it neo-modern, whatever you want. Right there, you buy. We're in an uptrend. That's a nice little play. Do you enter now? I mean, that's up to you with your risk threshold. But I would say if we come back and retest 32K, that is a nice potential entry.
Wow. Okay, Coach, your chance.
I mean, I open up my chart and I look at my levels and I'm like, yep, that's right. We're looking. There's one that we've been talking about, XRT. It's looking interesting. It's not ready yet. It's not ready yet.
When is ready? When is ready? We see the chart. Tell us when ready is. And Burb, then I'm coming to you. And then I see the Mac Alistair in the chat. Mac Allstar, I'm going to bring you in, and you're going to get a chance to talk to 3 experts and 1 show host. To talk to you. He's a newbie and he wants to know what to do. So we're going to bring him into the chat. Coach, why do you think it's not ready yet, and when will it be ready? And this is this is a call we've had on our show today. This is the robotics network. It's built on the Polkadot network. It's the XRT. It's apparently building something on Mars, if I remember correctly. This was called by Mr. Biz on our show.
Yeah, Mr. Biz. So I don't know, like there's just something about it on an Ichimoku level that like I'm just waiting for it to break up a little bit higher. I want to see it actually just break out of this level, because once it breaks out and retests, then I think it's going to be ready. So I've been just kind of following it, waiting for it to kind of do one of these and then start to break up towards its all-time high. And it's got a really nice V bottom here. And I have a good feeling about it. The Ichimoku's hooking up on the Tenkin. It broke out of the Kumo, even though it's pretty. The Kumo is kind of confused really on the 12 hour here, but I'm waiting. When I look on the daily, I'm like, okay, it's almost ready, because we are seeing on this predictive Ichimoku that it's going to eventually have a TK cross within the next few days. So you're looking at this one. If you're someone who's looking for a trade potentially, this could be one where you in a few days might see it be ready, and you should be looking at that $26.35 level to break, retest, and then you can enter and go.
We've got someone here in the chat saying that Dot is unstoppable. Cardano will eat it up. Guys, thoughts? Dot or Cardano? If you were to put money in for the long term, where would you put your money? You can only choose one.
Dot, without a doubt. Dot.
I'd say ADA. I don't know anything about DOT. I'm a chart nerd, so I could be completely wrong, but I know ADA has excellent momentum in whatever altcoin seasons. It's a place where people are looking to put their money. I'm looking for active markets. I'm looking for some decent momentum. So from what I know, I'd say ADA, but I could be an idiot. I don't know.
All right, so
capital chases. Listen, guys, capital chases what's new, right? And 2017 coins are kind of like passé, and they are outdated. So you cannot expect 500x bumps anymore, because that's what's happening with the DeFi right now.
Yeah.
Look, for me, it's a fundamental thing. For me, fundamentally, DOT has a much more vibrant ecosystem. The design of DOT allows for these multiple chains, these specialized chains that feed into what you want to call the main chain or the DOT chain. And I think that design just makes it exponentially bigger than Cardano. I'm a huge Cardano fan. I think that the strength of Cardano will happen when smart contracts get implemented. And that's happening now, like any week now, any day now. And then I think that's when the momentum will start. But for now, right now, my number 1, number 2, number 3 are Bitcoin, Ethereum, DOT, and then US dollar stable coins.
Yeah, I mean, you touch on a lot of stuff, Rand, just to add to that. Like, DOT has what you always talk about, that network effect. And that's where people are looking. That's where traders are looking. That's where investors are looking. ADA, I don't think that it's not going to become a giant. I think it will. But we ought to see if Celsius actually goes on ADA. And we have to see if their ERC converter does convert a lot of these projects to it.
I have no doubt in the people of IOHK. I know Charles. We know him personally. Been on our show. The guy's very smart. He adopts a very research, fundamental-based approach. So for me, I have no doubt that they're going to deliver what they say they're going to deliver. I'm just not sure when they're going to deliver it. All right, guys, we are running out of time. So, Burb, one more call from you. Cheds, one more call from you, and then we're going to let the Mac All-Star in. And Burb, I know you've got to go on the hour, so we're going to let you go, and we're going to bring in the Mac All-Star.
Awesome. Very simple stuff. Very simple stuff. Just like I said. I'm a big fan of DeFi right now, although I'm not really putting too much of my portfolio exposure into that because that's not really risky. And I personally am a risk aversion trader kind of like type. So I prefer to more preserve my capital rather than grow, because the capital, sort of like exposure is already big anyway. Crypto works as a leverage itself, right? So that's why funds, often don't put more than 5% of their entire equity into crypto. But anyway, long story short, this is YFDAI. I'm actually a big fan of YFDAI. I'm closing the relationship and closing the partnership with them. That's why I cannot really just under the NDA like disclose too much. But all I can say, it's looking bullish fundamentally, and it's looking bullish technically for a couple of reasons. Now, very simple stuff. If you look at it, let's just make it wide in here. Now, very simple stuff. This was of course like an obvious accumulation, breakout, retest, perfect. Here, right? This brings us another sort of like point of oscillations between the range of 1800 and 3800, so which makes quite an impressive accumulation zone as well, right? This is sideways. The trend is definitely strongly upwards. If you don't believe, you can just pull up some moving averages and just chill with that. So usually whenever the trend direction is just upwards by moving average, and you see consolidation, it just presses up, right? So I could expect easily targets like 6,000 for this one. Of course, this is never going to be financial advice because I'm a carbon pirate on Twitter, but you can still, in my opinion, keep have your eyes upon that, and whenever it taps upon this lower bounds of this trading range, I would definitely be a buyer in here. So that is my sort of like point of the day.
Burb, on that chart, do you have any concern of the inability to hold that 2200 zone after kind of breaking it and then kind of establishing that as support? You see what I mean? The inability to kind of stair step it there on that 2200 level, right. You would establish all those candles, just above the bottom of that rectangle. That it broke that on the way down. Yes, we regained it. But do you have any concern that maybe some weakness that's shown there? What do you think?
Yeah, I'm actually just thinking, because this is a new fresh stuff. So I generally think because you could expect more sellers in there, that's where more buyers appear, right? And you could see many. There's definitely no futures, so you cannot really expect too much of the chances that this was like a whale play or anything. But volume is healthy. The chart is looking healthy. Plus the levels, any sort of like support or resistance zones, or actually the levels that you could expect are in fact zones. Because you could, which you perfectly know about the chats, right? So instead of just entire world putting, aggregating all the lifetime money and just betting all one level, the world kind of like keeps differentiating those levels and entering a bit higher and lower around those levels, which tends to make, instead of making one sort of like a level, it makes it a zone, right? So I just prefer to call that a demand zone, and here the supply zone, where you could expect some sellers, right? So if you are a short-term trader, you could expect some selling around here and some buying around here. And if that's a trading range, you buy low and sell high, from range sort of like that.
All right.
So that is my point.
We are running out of time. So, Burb, I'm going to let you go. Thank you so much for coming on Crypto Banter. Your insight is always invaluable. Love to get you on again. And, of course, we'll do that sometime next week. Thank you very much, man.
I love it.
Cheds, I'm looking to one more quick call because I want to bring in another caller. I want to bring in a guy called the Mac All-Star. He's been waiting to speak to you guys or waiting to speak to us. So one more call before we let you go. And I've got the chat just going crazy. It says you the true master. So give us, true master, give us another call.
I have one up right here right now. And by the way, someone asked about my mask. I wear it for privacy. Also, I'm ugly. So you don't want to see me behind the mask. It's not about COVID. I just, it's privacy. So thank you for having me. So you mentioned DOT. I'm a fan of DOT, but how I would play this is I'd be looking for a value. I want to buy a dip. So I see a little bit of weakness here, the potential for the loss of exponential moving average support. What I've done is I identified a key level at which I'd feel comfortable buying. So I'm looking to buy DOT just below $8, around 770 to 780. So I think that would be a nice little potential setup. You see it come back, break a little bit of support, maybe reset the RSI a little bit, catch an RSI around 50, and then be in a nice position for a new leg up, and maybe even kind of have a volume trend that we break right when that would be potentially confirming that. So maybe we break the volume trend right as we bounce here, nice lower shadow candle, and kind of go from there. So that's something I'd be looking for.
So we're looking to buy DOT, and we're looking to buy it at just under $8. Mac All-Star, welcome to CryptoBanter.com. You've got 3 or 4 minutes with 2 experts and myself.
Yeah, good afternoon, gents. So I've generally been a bit of a hodler in crypto. I got in 2017. Before that, I kind of thought it was a load of nonsense. You read all the negative press and things like that. So I've just been hodling. But I said to one of my friends the other day, if I had to take a screenshot of all the coins I've been hodling and just, collecting over the years, and I do a bit of reading here, reading there, I won't fit it all in one screenshot. I think I got so many. I got a lot of the big players as well. But after watching your show, I wanted to get into trading because I hear you and but I have no idea where to start, what to do. I hear Coach K talking about Kumos and Kumo twists, and I hear nipples, which nipples excites me, but I don't know what the hell that means. I don't know what the hell that means in a in a chart and emo 8 and where did I start? How do I learn these things? What charts do I look at? I know I'm starting to learn a little about candles and hammers and heads and shoulders and teacups and so
Cheds is waiting to explode. Cheds, what is it?
I love this. I started out, I was the same way, and learning helped me feel more in control. So there's a million ways you could do Elliott ways. You could do the cloud, which I think is great, Coach. You can do Japanese candlesticks. You can do classical charting. I have some great book recommendations if you want to learn, classical charting by Schaubacher. I have the Bible somewhere. The Schaubacher technical analysis. In stock markets, you want classical charting. You need Japanese candlestick analysis, and you kind of blend those two. Throw that out the window. Throw it out the window. Identify horizontal levels. It's so simple. Take a level which has been established as resistance. When that resistance breaks, look to buy there if it comes back to it. Right? Almost all the best entries come from retests of support. You have a beautiful hammer candle. It bounces. Everyone chases, comes back down. The smart traders are waiting for that retest. So look for a change in trend that gives you an opportunity to get back in before it accelerates.
If you want to read the Bibles, what are those books again? If you do want to read the Bible before you throw it out the window.
So Richard Schaubacher, Technical Analysis, Stock Market Profits, 1930s. You'll understand about pennants. You'll understand volume. It's really important to understand volume. The most volume comes to the top and the bottom of a chart when you have a climax and a rebalancing of the equilibrium between buyers and sellers. Ascending triangle, descending triangle, whatever. Japanese candlesticks. These are short-term reversal signals, but they teach you about the psychology of the market. Lower shadows are bullish because bulls are buying the dip. Upper shadows are bearish. So you need muscle memory in your mind. You need to look at charts and kind of learn how to interpret these things. Or just look at horizontal levels, buy the breakout or buy the retest. You're probably going to be okay.
Yeah.
Okay.
So at the start. Yeah,
what?
Sorry.
Go ahead.
No, Karen. So is that the start? Start with learning the candles and how those charts work, what they're all about, etc., and then sort of progress from there and sort of learn all the other terms.
Yeah, because look, you have
As
to
you
keep
go.
it simple. There's a million ways to do it, but if you understand how the supply and the balance equilibrium is being worked out, the psychology of the chart, candlesticks are great because they're visual. So do candlesticks. If you don't want to buy the book, look on YouTube, watch Coach K's work. Look at all these other people have great work they're putting out there that's available for you. But really, candles are important, the basics of candles, and then understanding how like a bull flag forms with a strong advance, with a lot of volume, and then you have a consolidation period as the volume tapers off, and then you have your apex or your decision point that breaks out. So there's a common way the price will consolidate that repeats itself over time that allows you to get a sense of where the price action is and have a trading plan. It's easy to be overwhelmed, but as soon as you start reading textbooks, I'm telling you, man, you're going to feel so much better. I'm telling you.
Yeah.
All right, guys, sorry, we are completely out of time. Coach, any final closing thoughts, but literally in 1 minute?
Yeah, I would just say if you're trying to learn how to trade, I'm an educator. It's where I came from before I was in crypto. I would say that just start somewhere, learn about just basically support and resistance. Every single trading plan, no matter if it's mine or literally any other trader you watch, they all start in support and resistance. And if you can understand that there is a place where the market will stop going higher and bounce back down, or come back down and will bounce to go back up, that's the basics of like every single trading strategy ever. So learn that first. There's a lot of trading courses out there, but pick one strategy. Don't try to learn them all, or you'll be completely confused. So try to pick one thing you do, learn it, understand it, get really, really, really confident in it, and then you'll find your alpha within that. That's basically what you have to do.
And follow Coach K.
10,000 hours in the day.
Yeah, follow
I
Coach K.
absolutely do. I absolutely do.
Yeah. All right, guys, thank you so much. It's been an amazing episode. I'd love to keep you guys here forever, but it's a weekend. Let's go have a great weekend. Let's hope for another Ethereum all-time high this weekend, another Bitcoin all-time high.
Let's do it.
Let's hope for all-time highs. You guys have been legends. You guys in the chats, you've been legends. Give us some more love. One more time to hit the like and the subscribe button. I'll see you again next week. Same time, same place. Monday, 10 a.m. EST. We'll be here.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.